Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Thursday, August the 8th. Wow, 2024. I almost said August the 6th. Sorry about that. Okay, where do I begin? We were all there. We all saw it. And I have to tell you the truth, maybe in the back of my mind, you feel like anything can happen. And then I felt that way, but the way they left the market, the way the setup kind of got left, the way that, for the S&P, we're sitting right at the put wall. I mean, it closed just a little, like a few cents below it. So it really kind of was lining up that it was like, we should continue to tip over. And the NASDAQ finishing, I mean, they had the sell-off yesterday. So yesterday, the NASDAQ, I'm not sure, I didn't really measure it out, but the S&P 1% move. Today, excuse me, 2% move. Today, 2+% move. Back to back. So when we just pop it out to the daily chart and you're looking at this stuff, I was like, okay, hold on a second. This is Wednesday. This is Thursday. This was Monday. So Monday, Tuesday, still down. Wednesday, still down, but, doing corrective. Thursday, sorry. And I want to put a little bit of background into this because it really wasn't what I know I wasn't expecting. And I think from a lot of the comments that I've been getting is like, we're all kind of in agreement that we should continue to tip over and that we still had an additional low likely before this fourth wave would be over, or we would get a more sustainable rally phase. Now, interesting. Now, if I add in the data that I get from spot gamma, so I'm going to credit where credit is due, but it's how you look at these. And if you understand what's going on, then what happened today makes sense in a way. All right. So what got broken in both the NASDAQ, the Qs, the NDX, and the S&P, all across the board down to the spiders, is that there were gamma collections, strong gamma at just above, where there, I think no, hold on. I want to be accurate in this. So I am just going to go and pull it so that I can take a look at it. And there was coming in today in the NASDAQ, so that would have been the NQ, at 18,113, there was a large gamma. Now, it wasn't at the end of that scale, nor was it at the bottom of the scale. So it's kind of mid. So not huge, not small. So that was 18,113. We were above that on the opening. We gapped. The next one was just a combo level, but first position. So, and that was at 18,001, oh, excuse me, 18,195. We blew through that. And so we can continue to climb, and they really were headed towards the next level, which would have been 18,606. So now what happens when they start breaking those gamma levels? It opens the door for the risk on trade. And that because I've been kind of waiting for it, because the VIX has been higher. I mean, these types of trades, they're used to being put on when the VIX is at 15, 14, 13. And now we're at 26 down to 24 or 23, 22. So these trades get triggered with the volatility there because they can sell it and get more money. And then they can take that money, that fund, and they put it into the volatility of the underlying. Now, I just want, we're talking vol here, okay? So, but I want to show you truth here that, so we're going to go over, I'm going to take a look at NVIDIA. NVIDIA has been very volatile as well. Now, these options expire tomorrow. The volatility is 84, almost 85. And I'm coming down here at the 105. So you see the market closed at 104.97. The 105, 243,000 contracts trade, but only 38,000 were open coming into today, right? And they go out 170, 183. They're now in the money, but not $1.83, but they're in the money according to the bid and offer. 387 million shares of NVIDIA traded. That's a lot of stock. So the activity, you can see, we're in a futures market, which did not have as heavy volume, right? 650,000, not bad, more up in just a normal range for the NASDAQ. But in terms of how things traded, crazy. When you're looking at that stock, you're looking at, other Tesla. That was the other one. I got to show you Tesla. Then I will get back to the NASDAQ, and I swear I'll finish this up. Tesla was also extremely same type of a deal. Here we have 198.84, 200 was the high today. We come down, we look at the 200s. 204, 220, 68% volatility. 204, 220, they're not in the money yet. 115,000 with an open interest coming in of just 2 contracts shy of 21,000. Volume, okay. Stock's up 7. So, and it's also confronting bad news with recalls and other things. So here we are. This was not necessarily bearish engulfing, but it was a strong down day. This most definitely was a bullish engulfing. It totally engulfed yesterday's trade, both to the upside, equal to the downside, but both were covered. NASDAQ, what would you expect? Continued follow through. So the good feeling that I had about, oh, great, I've been able to put some labeling on the chart, lasted less than 12 hours. So let's dive in and take a look. I'm still, as from the weekend, and I believe even around Monday, I was talking about the possibility that because of the size of it, that Sasha and he brought it to me, that it really was not enough time for what we've covered. So in other words, it's like, it may be something bigger or a bigger degree. Now that remains on the table. But if I'm going to keep it in that it's in a fourth wave, then I'm going to count this out. Again, I moved to 4. Had to. This just took it over. So, because that would have to come in as a 5 and it would be a big failure. Big failure. So I moved it. I put 4, the 3 here, the 4 here, and then I put 5 here and put a C underneath it. So remember ABC. Now remember what I said. We could have an ABC or an ABC and then build an X wave and then do another ABC. Now that's, I think, what the ticket is. One other that I've got out there, and it might even shift and go to preferred, but it's going to take a little bit. Tomorrow's expiration should be very interesting and should add more strength to whatever actually is the underneath all this count. I still think that it's corrective in nature and that ultimately we should have another another little bit of a down leg prior to the market beginning to put in that minor 5th wave up, because that would take us to new all-time highs. Now, having opened my mouth and said that, I'm going to tell you that, look what I just did. I put an ABC here. So, and it came into the bottom portion of the box. I'm going to go right out here. Okay, there's the box. There's the low. There's the low. We got there. Now, so can I say that that completed it? Well, I could, but I've been under the influence of a market that's been pretty strong to the downside. And again, looking for a V bottom is what I thought. Whenever this ends, I think we get a V bottom and then it shoots off. That's not necessarily a V bottom. That would be more in tune with it, but now it's kind of late and no, I wouldn't consider that. So, but could that have completed a minor four? I think I'd have to say the potential is there. How are we going to know? It's got to really climb a lot. And so keeping all things on the table, and ABC still being that it's a zigzag versus a flat does not fit well. If I have to go drop all of this down a degree, and this becomes minuet, minuet A, minuet B, minuet C, and underneath it goes a minute A. Well, then, and that could also lead to that bigger four, but I don't know because it depends on how high this gets back up. Then we get a B wave. And if I had to, I'm telling you, I came all the way down to the 15-minute chart and I looked inside this thing. And actually at 1, 2, 3, 4, 5, maybe ugly. I get it, guys. B and then another 5. So 5, 3, 5. You can argue if you want to, but that's how I'm looking at it. So that being the case, A, B, we're in C because this is definitely a series of 5s. You can see it. All right. So if we're doing an ABC up, it could be a B wave. If I take everything down a notch, a degree, and then this becomes minute A, and all of this is the balance. So the C would be in a minuet degree. So I have to drop all the degrees. I can do that. And then we're still in a B wave. Going back to the hourly chart, what does that then suggest? Well, 19,067. But here we have additional. This goes to that minor 4. So basically, tell you what I'm going to do. I am going to actually take this off because it's already been penetrated. It's already done. So that takes that line out. Here we have for a B wave. So I've connected the entire push. So the entire push down, I'm now including to where we can maybe find resistance for a B wave. That's this side, okay? And it would be in a minute degree. So 18,720, that's 382. I think I might be looking for here to here. And a B wave, 50 to 62%. So 19,140, 19,560. And then we have some kind of matchups with 100% for a C wave. This one, as it relates to this one. I have 100% at 18,936, and then 1.618 at 19,675. These kind of match up, or this could complete it, the C wave. It's just doing it in between the 100 and the 1.618. But that could do it, and that could do it. It'll be the structure that tells us more, even more than the fibs, when they start exceeding. So I would think I would expect at least 18,940. But if it finishes there, well, then we're going to have one hell of a C wave. That much I think I'm going to tell you. And again, that's 50%. If I go to 618, that's not so common in a fourth wave. So again, you kind of start to then go to an argument about, well, maybe it is something else. So I've got to keep that out there. But I want to make sure that it's like what I'm really putting into this formula is that because of how these other products are trading and because they are so big now, there is so much money being flipped around. That's how it moves and why it moves. So that and the equity market, i.e. NVIDIA, that thing, everyone thinks it's a steal below $100. And I would suppose that the company's definitely productive and they have product, et cetera, et cetera. So truly, maybe it is. But at what point is it still would be overbought, or what point is it oversold? And so trying to find the happy medium is you've got a lot of people rushing in and starting to buy NVIDIA now without really taking a look at what could be a much bigger correction. The whole economy could push itself into a correction. It kind of would be Fed-led, I will tell you that. But I don't think that necessarily that it means lower interest rates so the stock market can stay higher. No, that's not what I'm talking about. Because I think they could lower interest rates and the equity markets would continue to go down. Because they have to remember that with inflation, the opposite, of course, is deflation. Prices go down. And it does affect the stock market. But in the end, it finds its level because they get their inflation number down to 2%. Therefore, then we can start to go crazy again. All right, sorry, I'm really going on here, but I think this is important because of the narrative that comes around with interest rates, interest rate cut, you got to buy the market. Please pay attention to the market. It might initially, but I don't think that it hangs out there very long. The count is the count. What we've done before this is still valid. I do expect additional new all-time highs. Now that may come after, but I think before we should go down and finish this minor fourth wave, if indeed this level did not do that. And I'm saying it hasn't because this is not very bullish-like. Doesn't mean it can't turn that way. And I swear, it's really weird because this coming in today, you wouldn't think, oh, that wasn't bad. Pretty bullish actually, right? So again, here's all I got. ABC, I'm leaving it in a minute degree, and we get another ABC, but first we got to put in an X wave, then we get another ABC that will end down. This ABC is ending up, it's being called X. Our corrective portion of it, the ABC, should be down. So we got to do an X, intervening, and then we'll do another one. So the higher it gets, it keeps us in line with this. So this fib, and maybe one more, make the minor wave 4 stay in focus. All right, moving averages. They're confused like the rest of us. On the daily, let's see. The daily is kind of like, oh, look at that. Put on the brakes, put on the brakes. The 50, sort of. The 200, you even with that huge rally, the 200's like, flat as can be. So, but that bar, normally you would say, I would expect an update tomorrow. That's all I'm going to say, and that's how I'm going to leave it. All right, let's go over and take a look at the S&P. All of those givens that I talked about, everything that's relating to the economy, everything that's related to options and flow and gamma, I'm going to just give you the numbers, but the same scenario happened here. Remember, I started by saying that the SPX closed just a fraction below the put wall. And we needed confirmation that it was going to get plastered. And it didn't happen. So, and the SPX closed today at 5,319. Now, going just over quickly, those numbers, what we had in the S&P, the futures market, the put wall was at 52.27. The put wall was there. And put wall was at 5,200 in the SPX coming in today. Right there as well was a large gamma on top of the put wall. So you had that. And then there was also a combo there. So in essence, the S&P had a trifecta going right at that 5,200 level, which continues to tell you how strong it is. And 5227 in the S&P, how strong it is. Now, the next one coming up is 5325. 5298 in the SPX, broken. 5325 in the ES, broken. Next above that in the SPX was another large gamma spot at 5,300. So you can now piece this together to see, why did it close up 125? Trading was forced by the tightness that we have between the levels of different strikes and the gamma. So that's why that thing didn't come down. And the trading is just going to go. Now we can see that it went vertical right off the level that we were looking like, oh, it's going to come down. And we're going to get a test, at least a new low and a test of 5,000. Didn't happen. Okay, now I had to do the same thing. Same setup sits with this as well. And that I'm leaving it in the minor 4. We've already gone over everything else, that it could be at one higher, that the time factor is there. Now, let's run one more time out to the 4-hour chart and look. It did. It came into the box and towards the lower quarter of it, right? Didn't get all the way down to 5,029, but it did get to 5192. Okay, so in the box, could that have completed it? Well, yeah, it could have. Is this really kind of what I'm looking for? No. I don't think we have a series of rallies. Then we have a 2% drop, basically then followed by a 2% plus gain. Now, yeah, that's kind of V-like. So is this really 3? This could be 3, that could be 4, and then we're putting a 5 there because we have a big failure. Well, then I would be looking for this thing to just sail, just go and get nothing, just fly right through all of this and get us back up to new high territory. Now that would, and it could do it simply based on having to react to the movement within the Greeks of what is being traded, the options, within what's going on in volatility. And all it truly is like the volatility, folks, they're selling it. They're receiving money. And they're taking that money because they're factoring in that volatility is going to go down, not up. So they're taking that money, and what they're doing, they're buying it in products where the volatility does go up. And therefore, the premium in the calls gets better. Strange game, but it's all run by algorithms and it gets done. Now, here, I cannot eliminate 100% and say no. On the time factor, it's more suitable for the market to have just completed a wave, and then we're getting into B. Or the market did an ABC and now it's doing an X and we're going to get another ABC. All things are on the table. Either this is wave A and this is going to be a B and then we get 5 waves down, or this is an ABC, this turns into an X and we get another ABC down. Both are viable. They can happen. We just have to monitor and get our structures down. That's all. So for tomorrow, my guess is that it is going to go up. I wanted to go to the daily and look at it. Sorry about that. The daily, Michael. There you go. And I want to open that up to show here again. pretty much bullish engulfing, did not equal the low, but still bullish. Well, yeah, it did. It exceeded the low. It went to a new low just before it went up and equaled the high. Massive day. All right, so bullish engulfing. I would expect it to go higher. I have 54.15, and then I have 55.63 or 64. That could be a B wave. It could be an X wave. We shall see. Just taking a look at the moving averages here. They are putting on the brakes. The 200, look at how flat it is. But had no reaction to all of this. Why? Because they X'd each other out, basically. So they're just sitting waiting for the next clue. Back down to the hourly chart. I think inside I got 1, 2. This might be a 3, a 4, and a 5. Or wave 3 is still in progress, gets us up to here. We do a little bit of a pullback, and then we race and we get up to here or higher. 2.618 is way up. 2.618 takes us out of the realm. So 1.618 may be as high as 56. All right, because that's that high. Now, I think I've said enough. I'm going to wrap this up because I'm watching the clock and I have been talking, and I apologize. Comments, please, share. Oh, once again, I did not put in. These are the fibs for a B wave or for an X wave. So this one pretty much going to be met. It has been met. Then we have 54.20 and 54.91. That is pretty reasonable, but I actually think we get a little bit higher because of this. So the more common, these match, and these don't. But I actually think a little bit higher. And then we get a B wave or an X wave. All right, that's it for today. Now, numbers tomorrow. Remember, I'm just double checking. Unless they snuck one in on me, they are non-scheduled. Nothing. No economic data tomorrow morning. It's going to be pure flows. Money, options, gamma. All right. The next Elliott Wave Daily will be on Monday, August the 12th. Right? So tomorrow's the 9th, 10th, 11th. Yeah. On the 12th. And I will do a weekly update over the weekend.